This podcast is part of the C-Suite Radio Network, turning the volume up on business.
Welcome to the Business Power Hour, hosted by Deb Creer. Join us as Deb talks with her guests, experts in their fields, as they share real-life stories and techniques to power up your business.
Good morning, good morning. I am Deb Creer, and I am passionate about giving professionals the tools that they need to make themselves and their businesses as successful as possible. And today we're going to be talking about something that not always everybody likes to talk about. It's not one of those fun, sexy, topics. We're going to be talking about taxes, and I need a sound effect. Dun, 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 the IRS. But what we're going to be talking about is how to keep your money, and how to do it in ways that are permitted by the IRS. Let me emphasize that. This is not hiding money. This is not doing things we're not supposed to be doing. These are things that we should be doing, and the tax code is set up for us to be doing this. But unfortunately, we don't even know about it. So please join me in welcoming Diane Gardner to our program today. Welcome, Diane.
Deb, I'm so happy to be on your program, and we're going to make this fun, believe it or not.
We are. I had so much fun chatting with you before we started the program, so I know this is just going to be great. Well, let me tell people just a little bit about you, and then we'll jump into this. So Diane Gardner is a certified tax coach and best-selling author whose proactive planning approach helps clients dodge the tax bullet. Her tax coaching sessions have resulted in a combined savings of over $3,151,006 to date. Hard-earned profits successful entrepreneurs and real estate investors would have given the government by overpaying their taxes. Diane is the co-author of the best-selling books Stand Apart and Why Didn't My CPA Tell Me That? She has also authored 6 other books, including Stop Overpaying Your Taxes, 11 Ways Entrepreneurs Overpay, and How to Stop It Now. And she's written a great new book that we're going to be talking about today called 10 Most Expensive Tax Mistakes That Cost You Thousands. So again, Diane, welcome.
Thank you, Deb.
Well, taxes really are something that we don't want to talk about. And the problem is we need to be talking about them because the tax code is so big and so complicated that for small business owners and for entrepreneurs, we don't have a clue, but more importantly, you say the words IRS and people are like, oh no, and we get afraid, we don't want to talk about it. So the problem is we do the absolute minimum. We don't want to push the envelope. We don't want to take anything extra because we don't want to get audited. And we always think, well, I don't know if I should. And we rely on the professionals who are doing our taxes to hopefully guide us. A lot of people, unfortunately or fortunately, do their own. And I'm sorry, that's great that you can do your own, but those tax programs, the software, they aren't going to say, hello, you should be doing this, and so what you really help people with, Diane, is how we can start doing these things on our own. But let's go a little bit further back because I'm always curious about, people and how they get started in this business. Why did you decide that this was what you wanted to do with your life?
Well, Deb, prior to becoming a tax coach, I was what you call just a traditional accountant.
Okay.
We helped our clients. We made sure that they filed everything on time. We did a great job. We get in them the right numbers.
Right.
We did that basic, more than what we call the compliance side of the business. Well, it was okay. I wasn't real thrilled with my business. I was kind of bored with it. And then the recession hit.
Uh-oh.
And we all know what happened during the recession. Thousands and thousands of small businesses went out of business.
Right.
Well, a whole bunch of those small businesses were my clients.
Oh.
Because they were in the construction industry or the real estate industry or in one of the industries that supports them. And you'll have those ripples went out.
Right.
And I sat here looking at my clients going out of business and going, if I don't do something different, I will be next.
Right.
At some point down this line,
Mhm.
I will be next.
Right.
I had just bought a commercial office building the year before at the
Mm.
top of the market,
Mhm.
owed way more on it than it was due.
Right.
It was worth at that point. Me and millions of others,
Mhm.
and knew I couldn't get out from under the building, so
Mhm.
I had better come up with something that was going to be able to generate some revenue,
Mhm.
keep my staff. I didn't want to lay anybody off.
Mhm.
That type of thoughts were going through my head,
Mhm.
and decided that I needed to take the advice of my business coach, who said you need to find a niche and start working in your niche.
Mhm.
And you can't just be a general accountant because you're going to die if
Right.
you do.
Mhm.
And so I started digging and looking and came across the American Institute of Certified Tax Coaches,
Mhm.
and took their training and went, this makes sense.
Mhm.
Instead of just telling my clients, oh, by the way, Deb, you owe $33,000 this
Mhm.
year, or $13,000, or whatever that number is, I get to say, Deb, because of the planning that we did, you only owe $13,000. Now,
Mhm.
had we not done this planning, it would have been $53,000, or whatever the magic number is. And then we get to celebrate the savings.
Mhm.
And
Right.
that puts me in a much different aspect of the tax code. And I always tell clients that the best thing in the world is I get to be a tax superhero
Yay.
instead of the bearer of bad news.
Mhm.
I'm the
Right.
superhero.
Mhm.
And that's way more fun place to
Mhm.
work than being on the other side of that.
Right. Well, and the tax code is ever changing. And the thing with many CPAs is they don't have time to delve into all of the changes. And so that's why it's great to be working with a specialist, even if it's, just setting things up. And then filing later is different. But that's one of the things that you specialize in is the planning stages, as opposed to, we take our box into our account and then we say, here we go, here's everything. By then it's too late. We didn't do things. Now, we might be able to go back and refigure some things, but there were many things that we could have done that we didn't. And that's where you come in, and that's with the planning.
Yes. We want to plan today so that when we hit the end of the year, we're set up great. We know that we can harvest the savings that our planning has produced. And we're not trying to do that Hail Mary pass at the end of the year and take
What can I deduct? What can I deduct?
Yeah. Throw some depreciation on there, make a quick contribution to a retirement plan.
Mhm.
We're not trying to do that type of stuff.
Mhm.
We're looking at longer range, longer term. I like to set a plan that rolls for 3 to 5 years
Mhm.
for a client.
Right.
And then obviously we have to fine tune it as we go down the
Mhm.
road, because businesses change, the tax code changes,
Mhm.
things like that. So
Mhm.
we're looking at long-term relationships with our clients,
Mhm.
and getting to come alongside them and help them implement,
Mhm.
because very few people will actually implement the plan themselves.
Right.
I
It
hand you this
sounds nice, but I'm busy doing this over here.
Yes. I hand you this nice, beautiful plan, and you stick it on your shelf,
Mm-hmm.
and it does nothing for you.
Right.
And so if I can come in and become the implementer for
Mhm.
you, in addition to the creator of the plan,
Mhm.
now we're able to see the results.
Right.
And that's where everybody's doing the happy dance at that
Mhm.
point.
Right. Now, I know that you're located in Idaho, but can you work with people throughout the United States?
I love to work with people all around the U.S. My clientele now is probably almost half and half.
Oh, okay.
Between businesses in Idaho and
Mhm.
businesses all over the U.S.
Mhm.
And I've met some of the neatest people through my podcast interviews, where they've heard me and what I've said resonates with
Mhm.
them. And then they reach out, and we're able to offer them a free tax analysis that
Mhm.
we do, where we can just sit down and take a look at their last
Mhm.
couple of years' tax returns and have a conversation.
Right.
Sometimes I find mistakes or missed opportunities, and
Mhm.
we're able to hop in and amend.
Mhm.
Other times that doesn't happen so much.
Mhm.
But it's just a nice chance for a conversation, get to know each other
Mhm.
before we decide if we want to work together.
Right. And technology is great. You don't have to be in the physical location with somebody. You can do Zoom, you can do all sorts of things.
You bet. Yeah. And Zoom is one of my best friends because it allows me to come right into your office, your
Mhm.
living room, whatever, we're meeting.
Right.
And It's almost the same as being face-to-face, not quite, but almost. It's way better than just a phone call.
Right. Definitely. Yeah. And I would imagine, especially with what you do, it does help to see the people, because body language is going to be very important in something like this. I can be saying, oh yeah, Diane, this is great. But I'm thinking, oh my God, and so, when we can see each other face to face, it helps.
It does. And it helps me kind of know if I need to slow down and maybe come back and reword it a different way. I work really hard to not use a bunch of accounting lingo when I'm talking with clients, but sometimes I need to rephrase it just a little differently, because like you said, their mouth is saying, but their face has got this deer in the headlights.
The deer in headlights.
Yeah. So then we'll back up and we'll go back through it again in a little bit different fashion. And usually by then they're saying, okay, now this is making sense. So I much prefer the Zoom type meetings as opposed to a phone call.
Yeah, for the most part, people have the technology.
Usually, yes. And I love to send out FedEx packages with a little email ahead of time that says, you have a package coming. Please do not open it until we're on Zoom. And they're just so itchy to get the thing open. And once we get on Zoom, they get to open their package, because I don't want them digging into everything that's in there and just totally getting overwhelmed. I would rather lay it out a piece at a time for them so that it makes sense and it becomes an asset, not a liability to them.
Right. And it can be overwhelming, even if we love the IRS and we love paying taxes. It's big, and especially for a small business owner, an entrepreneur who, that part of their business, they don't even really have time to think about, because they're trying to make money doing other things. And it is confusing. And, and it doesn't help that every time we talk about it, we say, oh, it's very confusing. So then your first thought, well, I can't even try it, because I'm just going to get confused. And we hear, oh, the tax code is this big and yada, yada, yada. Well, yeah, the tax code might be that big, but clearly not all of that applies. And, so that's where it does come in to where we have to have someone like you to work with to say, okay, this pertains, and this pertains. And you didn't even know that those three things existed.
Right. Because so often we live in the land of, I don't know what I don't know.
Right.
And once those lights come on, then that makes a whole completely difference in the conversation we can have.
Right.
Yeah.
Well, I read your book, and again, the most recent one is 10 Most Expensive Tax Mistakes That Cost You Thousands. And some of it I knew, most of it I didn't. And I'll be honest, I really like our CPA, and and hopefully she's guiding us down the right way. But we have to take responsibility for ourselves. And I think that's the most important thing, is we might really like the person who is doing our taxes for us. We trust them, all of those various things, but we're just one of many clients that they have. So it's very important that we are doing these things ourselves to make their life easier too.
Right. Plus, it's always good to build out your financial team.
Right.
And that financial team may be your CPA or your tax preparer, whoever's on there. It might consist of an attorney. It hopefully will now consist of somebody who's going to give you some tax advice. Those types of people working in conjunction with each other make you and your business stronger, more profitable, and you'll pay less tax.
Right.
So, yeah.
So it's interesting when I was reading your book, because, and I said this at the start of the program, these methods that we're talking about are fully legal. They're fully allowed. Don't anybody think, oh my gosh, I can't do that. We're going to be hiding money and I'm going to get arrested. We all know that sometimes tax code is the only way people they can catch people like Al Capone, and things like that. So these are all things that are permitted. But again, we don't know about them. So I wrote down some things as I was reading your book, and things that, it was like the light bulb went on, and it was like, really? We can do that? And the first one was your children. Now, I don't have kids, and so this is probably why it never even came close to even me thinking about it. But I love the fact that there are ways that you can hire your children, and it is fully allowed. And, and there's many benefits to it. So, let's just kind of go through some of these. And I'm just going to pull some out of the air. Feel free to tell me some more. The first thing was that you can start paying them a salary at 7. I mean, I always thought it was like 16, 18, 7. You can pay a 7-year-old.
According to the IRS, and that came through from some court cases that went through. They determined that 7 years old was a legal age. Now at 7, they're not going to be doing your invoicing and stuff like that for you. But there are some things in most businesses that a 7 or an 8-year-old can do.
Right.
If nothing else, they're really cute to use in your marketing at that age.
Right. And, they do have to be business related. I mean, you're not paying them to do the dishes unless you are a restaurant, or something like that. But, I love that. And one of the other things that you talk about with kids is that when you pay them with a check. So it's not money going into their piggy bank, and it's going into their account. So it has their name on it. And, one of the really important things that many people should consider when they're doing this is it can already be a retirement fund, or more importantly, one of the 529 funds to start, putting money away for their college education.
Or even a Roth IRA.
Right.
Can you imagine if you started dumping money in a Roth for a young child, and let's say you put money in it for 5 or 6 or 7 years as they were working in your business, and then maybe the kid can't afford to put anything more in it for the next 10 or so because they're going through college, they're getting married, having kids and stuff, and then they can start contributing again. Can you imagine what they'll have at retirement time?
Oh, yeah.
Just with the power of growth over that number of years. And it would come out tax-free, not only the principal, but all those earnings over all those years. So a wonderful, wonderful planning tool for a younger person like that.
Right. And it is kind of hard, I'm sure, where you're saying, okay, little Billy, you've earned $100 today, and I'm putting $100 away for your school. And they're like, well, but wait a minute.
What about me?
I have a new toy I want to buy, or something like that. So, are there ways that you can split it? So say $90 goes into the Roth IRA and they get $10.
You bet. Yeah. Because what you can do is you can put it into their bank account, whether it's a savings account or whatever type of an account. And then from there, you make the transfer into whatever vehicle it's going to go into. So you bet. But I'm going to back up just a little bit. If we're going to be having our kids work in the business, we want to make sure that they're doing a job that is safe for them to do it at their age, but that we're recording it with a timesheet. So we have proof that they actually worked those hours. We're paying them a wage that would be comparable to what you would pay some other young person.
We're not paying them $100 an hour.
Right. Yeah, they're not getting executive salaries or anything. So we're doing the things that if it was ever questioned by the IRS, we can show that they are legitimately working in the business. We've kept our records. We've got a good record keeping system. The money has gone into their account. It did not go into my account or your account. It went into their account. We cut it. We paid it by a real payroll check or direct deposit, whatever.
Right.
So they have been treated no differently than any other employee, which now helps pass the IRS test of, is this legitimate?
Right.
And that's a big hurdle that we want to be thinking about, that we're not shortcutting and just taking $50 out of my pocket, handing it to my daughter and said, here's your pay. Because that doesn't work as a deduction.
No.
Yeah. So, and then good news under the new tax law, the first $12,000-ish that they earn is not taxable to them. So it's a great way to funnel money from your higher income level down to their level at potentially zero.
Great.
So if you've got a college student or a high school student who comes in and works in your business during the summer, there's probably not going to earn more than $12,000 in a summer. Right. So you could potentially move it from maybe 24, 25% tax bracket down to zero.
Right.
And it's money you would have given them anyhow.
Right.
So
yeah, because they would have said, hello, going to the mall, doing whatever. And
hand is out. I need, I want.
Right.
Yeah.
And it is important that they are doing the work. We're not saying you're just faking it, because they need to learn to do the work. I mean, this is something that you're teaching them. It's skills that they're learning. And some of it might be, who knows what it is? It could be things like, say you're getting ready to go to a special event and you're a sponsor, and so you're doing 200 goodie bags. They can help stuff the goodie bags.
You bet.
And so what I'm trying to ramble about here is that we're teaching them to be responsible also, and to do, some of the job duties. And if I had a kid, there would be things that I could have them do.
You bet. And we're teaching them the value of money. We're teaching them work ethic. Plus, we're putting something on a resume for them for down the road.
Right. It counts.
Start somewhere. And so we're dropping something on that resume for them. So all those things over and above just the tax planning opportunities.
Right. And again, it's 7 and up. That just baffles me.
Yeah. Why they chose 7, who knows, but the IRS did.
Right. Yeah. 7 is kind of an odd. For many, I guess that's what, first grade, maybe.
Probably. Yeah.
So the poor kindergartners, they're out of the loop. But once
you got to hold off.
And so I mean that fascinated me. And if anything, if people listening or watching, that is something to that you should really keep track of. Now we're talking about children, but what if it's grandchildren, nieces, nephews, somebody like that?
Flip it around. What if it's parents?
Right.
What if
a family member
in time where we might be helping our parents down the road?
Right.
Is there something in your business you could help that parent with who may be surviving on just Social Security or Social Security and a small little pension of some sort? I did this for years with my own mom in my business. She couldn't make it on just her Social Security. So she came in and she folded newsletters. She typed down files. She took out the trash. She did stuff like that around the office, and she got a paycheck for it.
Right.
It's money I would have given her anyhow after tax deduction, moved it to a pre-tax deduction by having her come in the office and do these little things. So it's a great strategy for any family member that you're potentially helping out. Whether it's a child, a parent, a niece, a nephew, an aunt, or uncle, any of those types of things. It's a great way to help your family and potentially bring that money from an after-tax deduction into a pre-tax deduction.
Right.
Which is a win-win for everybody.
Right. Now, does it need to be a family member? What if it's the neighbor kid?
Yeah, definitely. As long as you hire them in your business. Yes.
Okay. And obviously, as you said, do all that paperwork. So you're going to have, now whether they're 1099 or W-2s, and that's a different discussion because there are, different things with that. But, they need to be treated just like they were a 25-year-old employee.
Right.
Great.
Yes.
Well, now, one of the things that, I've always been fairly conscious of are the tax deductions and things that are allowable for home offices. But I think many people don't quite understand that concept. And so, let's talk a little bit more about that, because I've had people who have said, you have one book in your office that's not business related, doesn't count. Or you're working at your kitchen table. All of these various things. So let's start with, is there a definition, or what qualifies according to the IRS as a home office?
So Deb, what makes it qualify is that we use it regularly and exclusively for business. And that's where people sometimes fail. They'll have the spare bedroom, but it'll have a bed in it.
Right.
And when the grandkids come over, they sleep in that room. And so they can fail the test that way. So I always tell my clients, if you're going to use the home office, you set it up and you take a picture, and there is no bed in that picture.
Right.
Or
it might be a futon, but
we make sure that we definitely have set up a space. It does not have to be a whole room.
Yep.
It can be a corner of the house. Now, the kitchen table doesn't work well because we can't pass the exclusion.
You should probably have a meal there on occasion.
Yeah, at least once in a while. Find the table and serve some meal. Yeah. But it is a very misunderstood deduction. When I first started out in the tax world, anybody who claimed a home office was almost guaranteed of an audit.
Right.
And
that was one of those red flags.
Yes. Yeah. For many, many years, even after they fixed that, many, many years, accountants were saying, you can't take a home office. You just increased your risk for an audit. Well, the IRS came out with a new safe harbor rule a few years ago.
Mhm.
And so now we've got all kinds of people taking home office.
Right.
But where it gets really confusing is somebody like maybe a real estate agent
Mhm.
who might have an office in the broker's office,
Mhm.
but they go in and they do some paperwork, but the majority of what they do is at home.
Right.
Home is where they keep their records. It's where
Mhm.
they make their calls. It's where they
Mhm.
have their files. That kind of stuff is at home.
Mhm.
And so sometimes they think that just because they share an office or they rent an office at the broker's office,
Mhm.
that they can't deduct a home office, when in fact you generally can.
Okay.
You just have to be the place where you do your administrative type work.
Mm.
So another case might be a doctor. He
Mhm.
might have an office at some other place where he sees patients,
Mhm.
but all of the administrative part of the work is
Oh.
done at home.
Oh,
So
okay.
kind of play that out in your head with some other industries that might have a home office where they do their
Mhm.
billing, they
Mhm.
do their receivables,
Mhm.
they do their bookkeeping or whatever.
Mhm.
Any of that kind of stuff is done from home.
Mhm.
The rest of it is potentially done someplace else.
Mhm.
And
Right.
we've had several court cases that have actually clarified that.
Mhm.
And so now we know that, yes, in that situation, a home office is still deductible.
Mhm. Right. Well, and one of the trends, in the last several years is the shareable space that you can rent.
Mhm.
And so you can go in and they've got, desks, they've got conference rooms, they've got whatever. A lot of people use those because then they have a physical address. They might have somebody answers the phone, things like that.
Mhm.
But again, they still might be doing 90% of their work at home.
You bet. Yes. Yeah. They just need that physical presence to lend some credibility,
Mhm.
or
Right.
it's a quiet place to go do their writing or
Mhm.
whatever it is that they do.
Mhm.
But I bet you the record keeping in that part of it is done at
Mhm.
home. And
Right.
so they would still have their home office.
Mhm. And, I love that it doesn't necessarily have to be a separate room. Normally it is your spare bedroom, right? Everybody has one of those. But you might not. I mean, you might have people in all of your bedrooms. So if you have a desk in the corner of, say, the living room, that's all you use it for, that counts as a home office?
It can count. We pick
Okay.
up what that square footage is, and we
Okay.
can take that as a home office.
Mhm.
Yes.
Right. And it
There
is
again.
figured by square footage.
Right. Yeah. Yeah.
Mhm.
Take the picture. So we've
Mhm.
got it all set up.
Right.
And I tell clients, take a picture and print it off and put it in a file, because if you're ever questioned, the first thing we want to be able to show that IRS agent is, here's my picture.
Mhm.
Yes, I do have a home office.
Right. Right.
Yeah.
And there's other deductions that you can take, and if you home office, and that always gets a little questionable for me, and obviously they change and things over the years, but I remember many, many years ago when I was a little kid and a Girl Scout, my mom held all of our Girl Scout meetings at our house. And so that was, once a week, all sorts of things. And now, granted, this really was quite a few years ago. And so things may easily have changed. But she wrote off on her taxes some things like toilet paper, some of the electricity, some of the things that we used for our Scout meetings, she was able to claim as a deduction.
Right, right. And that would be more on your itemized deductions,
Okay.
your out-of-pocket volunteer expenses would
Ah.
be the
Mhm.
area that she was probably using.
Right.
But one of the best things about a home office is what it does to your mileage.
Right.
For those of us like myself who come to an office to go to work,
Mhm.
my business mileage starts once I've arrived at my office.
Ah.
From
Mhm.
my office out to a client or
Mhm.
out to a meeting and back is deductible, but from
Mhm.
home to the office is not deductible. That's
Mhm.
considered commute.
Mhm.
And so for those who have a home office, your business mileage starts when you step outside your front
Right.
door.
We're commuting everywhere.
Yes. Well, you're not commuting. You
No,
have business.
commuting, yes,
miles.
commuting is the
Yes.
key word.
Yeah.
Mhm.
So what's really hard is I've got a few clients that from home to their office is maybe it's 30 or 40 or 50 miles,
Mhm.
but from home to a client or a customer it might only be 5 or 10. They lose those miles because
Right.
they would have to drive to the office and then back to the customer.
Right.
So those get really confusing for
Mhm.
people.
Mhm. And mileage is probably one of the things that I've, always had discussions with, and I keep really good track. And it's funny because, once we moved to Atlanta, I drive a lot. I mean, Atlanta's big, so I drive a lot. And, so I keep track, and if I deviate, especially for personal, so if I go off here, drive 2 miles out of the way, I make sure that's, all those various things. But I remember, and this has happened more than once, where I have told people that I keep track of my mileage and I claim it on my taxes. And they've said, God, isn't that a waste? I get several $1,000s back every year, because I keep track of my mileage.
Yes. For 2019, it's 58 cents a mile, just using the standard mileage deduction.
Right.
That's huge.
Oh,
I've got
definitely.
clients that are getting probably $4,000 and $5,000 off of their taxes as a result of tracking those miles. So is it worth it to track it? You bet. Especially today where you've got an app on your phone. It's so easy. You don't even have to pull up the little calendar book and handwrite it in. You just hit the app on the phone. It's satellite driven, so it knows when you start. It knows when you stop. It knows where you were. It knows how many miles you drove. And it makes keeping that mileage log a whole lot easier than what it used to be.
Right. Yeah, because, we used to have the physical one and we wrote it all down and all of that. And I'm still a little backward. I don't use the app. I still compute stuff. But, it's based on my computer. And of course, the nice thing is I know, okay, from my home office to client A, it's 13 miles. Well, I have to refigure that every time.
Right.
I just know it's 13 miles.
Yeah. Yeah, I do a lot of that myself because I go to the same places. And so you just know what those amounts are and calculate it. And depending on the type of business that you're running, you're either going to just take it as a deduction on the tax return, or you're going to have the business reimburse you for it through an accountable reimbursement plan. So just different entity types have it handled a little bit differently.
Right. And for some businesses, they're actually using their vehicle as part of the business. They're delivering, they might have signage on their vehicle, all these various things. And it's funny, I have a friend who has signage on her vehicle. And I remember, now this was, again, several years ago, she was told it needed to be permanent signage, so that she was always, her car is advertising all the time, as opposed to the magnets that peel off. It's very interesting, all the things that just pertain to your car.
Well, and actually the magnet ones work just fine. IRS says they're great, but the only part you're able to write off in that instance is the cost of the signage,
right?
Whether it's magnet or permanent. Just because you put signage on your car does not mean 100% of your miles are business.
Right. Yeah. Even though you're advertising as you're driving around.
Right.
No.
Now,
that doesn't count. So,
but we do have several different industries out there where their cars or their trucks are out constantly. They're doing service calls, technical calls, installation calls, that type of stuff. Generally, we handle mileage different in that situation, especially if there's more than about 4 or 5 vehicles in the company. And we'll put them on a depreciation schedule and we'll track the actual costs, usually by vehicle, so we know what it's costing them to operate each vehicle. It gets into a little bit more record keeping than just keeping track of your miles. But
yeah, if they're exclusively using that vehicle for their business, they're not driving it to the mall, they're not doing whatever, I would imagine that you could include things like new tires, maintenance, all of those various things.
Yeah. And then if that vehicle has a gross vehicle weight, GVW, of over 6,000 pounds, it gets handled differently on a depreciation schedule than if it's under. And so my clients more in the construction industry where they have trucks and stuff, we're always making sure now when you buy that next truck, it will be over 6,000 GVW, right? It'll yes, ma'am.
Bigger, and so, but
so then we make sure that they're doing that because it's a huge difference depreciation wise for them. Right. So all these little tentacles that come out of one little topic.
Right. Yeah, like I said, I'm when I start talking to people about vehicles, they're always just amazed, or they'll tell me, I don't drive that much, and it's like, and so I tell them, keep track for a month. If you keep track for a month, and it really wasn't very much, then, maybe not worth it. But, my guess is you're going to drive far more than you thought. And I love the fact that there are also different ways to compute it. You can do an average, you can do all sorts of things. Your book explains all of this. And then, of course, I thought, no, that's why I hire somebody to do it.
Right. Yeah. As long as you have your miles, then we can do the other part for you.
Right.
Yeah. Yeah.
So are there any other home office things that many people just completely miss?
I think we've covered the biggest one is the actual expense itself. So by taking a home office deduction, we're able to deduct a percentage of either the rent or the mortgage interest and the property taxes. Now that becomes a bigger issue than it used to be, because under the new tax law, you're on your itemized deduction schedule, you're limited to $10,000 for property taxes and other types of income taxes. And so somebody who lives maybe on the East Coast where the property taxes are considerably higher is losing out part of their property taxes. We can take some of those over on the business through the home office, and then they don't lose quite as much. So this is a little side note there.
Yeah. What about things like your internet access? All of those things now, obviously, especially if it's a home office, unless you have a dedicated line, can you do a percentage?
Yes. Yeah, we do a percentage of internet. Their cell phones will come into play with a percentage of their cell phone. So and that's kind of on a case by case, trying to figure out about how much use is personal versus business. Right. And then take those percentages accordingly.
Yeah, like my cell phone, it is my business number. It is the number that I use, on everything. And my voicemail says, "Hello, you have reached the Office of Wise Women Communications." And do I use it for personal? Yes. But we in an office, you make personal calls too.
You bet.
But yeah, so it's just kind of one of those things to be thinking about.
Well, and thankfully the IRS has taken away the requirement that none of us ever met, that we were supposed to keep a log for every one of our calls made on our cell phone.
Unless you're an attorney, attorneys keep track of minute by minute.
Right. Yeah, but they did away with that, which makes much nicer, because I don't have anybody in any of my clients that ever kept that log up.
Right. Yeah. Well, and, even if you're using it for business, you're probably still going to chit chat a little bit about personal. And that gets very complicated. Yeah.
Yep. Yeah.
Well, several other things that I picked up when I was reading your book, obviously, I think probably the biggest thing was, I need to have somebody like Diane help me. Because it's just very complicated. But, one of the things is, what type of business are you? And I mean that as in, are you an S Corp, a C Corp, an LLC, all those various things. And, I've had guests on my program before, that is one of the things that we always talk about when you're starting your business, is you absolutely need to become an official legal entity for a variety of reasons. And so, in many cases you need to talk to an attorney, all those various things. But, for many people, when we're just starting out, we took the easiest way. And so in your book, you talk about the fact that the easy way might not still apply. So tell us a little bit more about that.
You bet. Because sometimes I won't say sometimes, most of the time, over being in business for several years, you will outgrow that beginning entity type.
Right.
And what started out at the beginning was nice and easy and it worked and everybody was happy, now starts costing you money. And I'll use the example of a sole proprietorship or a single member LLC. As we get going down the line and we're starting to make some profit, we can be overpaying self-employment tax by thousands and thousands of dollars and not even know it. You're just wondering, like, oh, my tax bill is so high, grumble, write the check, move on. And not even realizing. So I've had clients that when we did their tax plan, we realized they were overpaying their tax by $20,000 or $30,000 a year because they were in the wrong entity type for where they are today.
Right. And let's be honest, IRS isn't going to say, no, here, we're sending you money back. You give it to them to keep it.
And what's funny is the governmental accounting office, publishes every year a figure that they estimate, and I think it was something like the point of like $2 billion is overpaid in income tax every year.
Right.
They'll say that, but they won't tell you that you are probably overpaying your taxes.
Yeah. Well, and again, it's because we get confused, because we don't want to rock the boat. We
Right.
don't want to test anything. It's so funny. Before we started the program, I was saying that I had gone and gotten my hair cut today. And, maybe I could claim that as a business expense. Now, part of what I do is clearly this, it's my image, and if I looked, unkempt, all these various things, and people might not watch me, especially a business program. But those are kind of some of those iffy areas, but yeah, there are things that we do need to consider. I know people who, for example, public speakers, their wardrobe, and they only wear those clothes when they're speaking. So basically, it's like buying an office supply. Instead, it's a suit.
It becomes their
people don't even
uniform.
think about that.
Yeah. It becomes their uniform.
Mm-hmm. Right.
And that's what they wear when they're speaking.
Right.
And so in that case, then it potentially is deductible, where you and I, if we were to go out and buy a suit, may not be deductible because that's not something we would use in the general course of our business.
Right.
So the IRS says it has to be necessary and ordinary for the industry and the type of business that you're in.
Right.
Which is a wide interpretation.
Yeah. I couldn't just go out and get a bunch of polo shirts with my logo on them and, yeah, well, maybe. I don't know.
You might under advertising and marketing.
Oh, that's true.
Might. Yes.
Yeah. And I think that is where it gets tricky, is there are different ways to categorize things. Business meetings are kind of those big iffy things. Is food consumed at the business meeting? Did you have to pay, like say a chamber of commerce, you had to pay $30 to attend. Well, okay, but you ate there, so does that mean you have to write off $10? All those various things.
Well, a lot of that goes back to, did they break it out on the invoice?
Aha.
If
So if it just said $30, I get $30.
Generally speaking, yeah.
Oh, okay.
Now, I won't say for sure, but generally speaking, yeah.
Mm-hmm.
Yeah.
Well, and so, obviously it depends on the event. If it's truly a business meeting, so maybe they do once a month, they do an educational seminar. Good example. That is pretty justifiable as a business thing. If it's, hey, they've done a casino night, maybe not.
Maybe not. Yeah.
Right.
Because under the new tax law, things like entertainment are no longer deductible.
Right.
So then does that fall into the entertainment realm, or is it still a business meeting? So as you're planning your own events, or any of your listeners are planning an event, we want to make sure that whatever type of event we plan, we make sure that there's some business chunk in there somewhere, so that we can deduct the evening or whatever the event is. Yes, we might feed them because we brought them in over the lunch hour, during the dinner hour, or something along those lines. But we've talked about our business, we've talked about marketing, taxes, we've talked about something, and we've prepared an agenda that they may or may not see, but we've prepared an agenda that we have in a file if it's ever questioned. That this is what we did, here's what we talked about. And keep that business flavor to it always.
Right. Well, and even in, say, your promotional materials, include things like, make sure you bring, let's try this again. Make sure you bring plenty of your business cards, because you never know who you could meet. I mean, that sentence right there makes it, it gives it a little bit of a business flavor to it.
Yeah. So making sure that as we do things, we're always stopping to think about, how can I make this deductible, more than, is this deductible?
Right.
Because there's usually, not always, but usually a way you can do it if you structure it correctly.
Right.
And if you're willing to do that, go that little extra mile of making sure that you've dotted those I's and crossed those T's, then we have a nice little deduction there.
Right. And you've mentioned several times, that we have to keep good records, whether it's, our receipts, whether we're having an event, all these various things, because audits do happen. I mean, and I love the fact that in your book you talk about they're not nearly as common as we all think, which is good. Still one in 100. So that's
Something
still,
like that. Yeah.
But, if you have your ducks in a row, it's going to go much better, and I mean, it's funny because what we think about with IRS is what we've seen on TV, that they're going to get us. Like, no, they really want to be as fair about it as possible.
Right, right. And in the book, I talk about being so scared of the IRS that you're just paranoid, and so you're not going to try anything. I kind of chuckle to myself, never out loud, but a client will get a notice of some sort to the IRS, and let's pretend this is a tax notice. They come walking in and they've got it by just the corner because they don't want to touch it.
Right.
Kind of just drop it on the front desk, and it's like, okay, I've done my duty. I've given it to Diane. I'm out of here.
Yes, she can deal with it.
Yep. And so it's good to have a respect for the IRS, but we don't need to be fearful and scared as long as we have good records and we're not trying to pull anything that isn't deductible or isn't allowed by the IRS. As long as we follow their rules and keep good records, we're in relatively good shape. Even if we are selected for an audit, we've got our records, we've got our stuff, and we don't have to live in extreme fear.
Right. Right. Now, I did have to chuckle, Diane, when you pointed out the fact that, an activity like, say, a bookie, that's not legal. But, if you're paying your taxes, that might be okay.
Well, that all income is taxable, whether it's legal or not.
Right. Yeah. So, the bookie, the whoever they pay their taxes, okay. Now they might be arrested for something else.
Right. Well, and two, you'll hear me say a lot as I'm doing interviews or as I'm handling seminars and conferences and things like that. I always say we all have to pay our fair share of tax, but there's nothing in the IRS code anywhere that says we have to leave them a big tip.
Right.
And most people are leaving them large tips, not even realizing that they're doing that.
Right.
And they'd be mortified if they knew how big that tip was.
Yeah. Well, and if we do it right, we shouldn't owe or get back. I mean, it should be a zero sum.
It should.
And because, I love the people, and, we do this on occasion too, where we're waiting for our IRS refund, of whatever amount. Okay, it should have been in our pocket to start with. I mean, and loaning the government our money is not exactly the best thing that we should be doing.
Right. Yes.
Years ago.
They're not the best financial advisors out there.
Oh, yeah. Yeah. This was before I was married. And so, I filed taxes on the easy form, and all of those various things. So this was many years ago. I got a tax refund of $1.
Oh, wow.
And I thought, you know what? That really is the way you're supposed to be doing it. Now, I was a student and, all sorts of things. But yeah, I got $1 back. And I never cashed it just because I thought it was pretty funny that I got $1 refund. But I mean, that really is the way we're supposed to be doing it. We're supposed to be keeping as much as we are legally allowed to do.
Right. And then that's the term, is legally allowed.
Yep.
Yes. Yeah.
And that's the one thing, I mean, that bothers me when I have businesses that want to do a cash transaction. Now, I'm not talking about, hey, you walked in McDonald's and you're giving them cash. I'm talking about, say, you have somebody who's done some work on your house and he says, well, here's the invoice. Or if you write me a check, I'll knock $100 off. And I'm like, that just always makes me feel squeam, but I take the cheaper one. But I know what they're doing. I mean, they're not reporting everything.
What they're not realizing is the IRS has all these standards out there, and they know that a business in your particular area doing your, size of stuff should have X amount of dollars in revenue, X amount of dollars in profit. They've got it so dialed down that they know when you're doing things like that. And periodically they go after industries or businesses that are heavy in the cash side, but they'll also come over and they'll look at those who don't normally get cash, but they're not fitting into the box, if you want to call it, because they've been skimming off the top and paying under the table and those types of things.
Right. And, we can certainly get cash, but the important thing is to record it. I have clients that pay me with checks. But I've also had some, like when I've given seminars, I mean, people are giving me cash. That's great as long as I record all of it.
Right, right. Yes. And that's part of keeping that fear of the IRS at bay. If we're doing it the right way, we're recording all of our sales, we're recording all of our expenses. You know, we've set ourselves up to take advantage of what the tax code has to offer us. Then there's no fear out there. But if you're skimming off the top and you're not doing the things, then yes, there is some fear.
Right.
Because sooner or later, you're going to get busted.
Right. You know, and yeah, we can only be lucky for so long. Well, oh my gosh, Diane, time has just really been flying. This has been so much fun. You know, and so, you know, at the end, we'll give people a chance to get your contact information, because there really is so much more to discuss. I mean, you know, we've just barely scratched the surface on any of this. But, you know, there are some other things like, you know, that I wanted to talk about. And some of it gets very complicated because, you know, we're a small business. You know, I love it when they say small business can earn up to what, 50 million a year or something. Yeah. I'm like,
most of us aren't there.
yeah, no. There needs to be a small business and an extra small business, or, you know, things like that. But for many people, we're just, you know, scratching by. And so we're not thinking about a lot of these things, and we should be. You know, that's the important thing. Paying yourself, medical costs, you know, do you have, you know, setting up retirement plans, all of these various things. So what do you tell the people who are saying, you know, Diane, I'm just making just enough to get by. I can't do anything extra.
That's always a tough spot for me as a consultant, because they really can't afford to have somebody come alongside them and help them guide and
hire you.
Yeah, they can't afford to hire me. So then I say, you know, do something like read the book, listen to podcast interviews, pick up some of those nuggets yourself that you can start implementing until they get to the point where they can afford to come in and have a coach or a consultant walk them through, help implement for them, that type of thing. Because it's hard. I remember those days myself, and it's hard. There isn't an extra dollar to go anywhere.
No.
So, yeah.
But, you know, we were chatting before the program, and one of the things that you also offer, you know, we've been talking about taxes and things, is how to increase profit. You know, and so to kind of tie it all together, because, you know, we pay more taxes because we've made more money.
Right.
And look, I have a sound effect.
Cool.
I love it when I get to do my sound effect. But, you know, it is something that you offer. And we didn't, like I said, we didn't even have a chance to talk about that.
Yeah, I'll have to come back and talk about profit planning.
Yes.
Because in addition to a certified tax coach, I'm a certified profit planner.
Right. You know, and that's one of those things people really don't think about.
Not at all.
You know, and I'll be honest, put my hand up. Yeah. And that is the hard part, because we're just grinding along. You know, we're trying to get through our days, and we never really stop to think, are we charging right? Are we watching our costs? You know, it's always funny when I start looking through my books. I'm like, wait a minute, what did I pay for what? You know, I had a guest on one time that said, go through and figure out all of your monthly things that you pay. You know, your monthly subscriptions.
Yes, eye-opening.
Right, and you're thinking, okay, well, it's $8.99. Okay, you've got 5 of those over the course of 12 months. That starts adding up.
Yes. And how many programs and stuff have we bought and never broke the seal on them?
Oh, I know.
Guilty.
Yeah. You know, or bought that cool toy, you know, not toy, that cool new business thing. I mean, I have boxes here that, you know, it's like, oh my gosh, I absolutely have to need that. That's going to come in so handy. And what was in that box again?
Yeah. You got busy and didn't come back and get it. Yeah. So we do, in the profit planning world, we do a lot of digging into that type of stuff. We do a lot of digging into your employees, your staff. Are they pulling their fair share of the weight?
Right.
Are they out there taking a siesta in a shady spot because they're out in a truck and you can't see them? You know, some of those kinds of things can be huge on your bottom line.
Well, and, you know, one of the big ones, especially for people just starting out, is, you know, or actually they probably wouldn't be just starting out. It'd be kind of this transition, employees or consultants. You know, what is better? And obviously there's benefits to both.
Right. And at certain times, one makes better sense than another.
Right.
So there's just so much to the whole financial picture that that's why I like to do tax and profit planning together, because they cover both ends of the spectrum.
Right. Yeah, because if you're doing one well, then the other one is done well also.
Right. So as we're increasing the profit on one side, we're helping you tax plan it on the other side.
And granted, you might be paying more in taxes, but that's okay because you're earning more.
Right. And I say, congratulations, you're paying more, but your sales went up X amount and your profit went up X amount. But look how much more you were able to put into your retirement funds, and all of those various. All those things. Yes. Yep. They all have a part of being a well-balanced business.
Great. Well, Diane, as I said, this really has been fascinating, and time has just flown. And I strongly encourage people to get your book. You do have multiple ones, but the most recent is 10 Most Expensive Tax Mistakes That Cost You Thousands. And really, I was looking through it going, yeah, guilty. And so, and I like to think I'm a fairly smart person. So, it is one of those things that I think everybody would find something that they benefit from.
Definitely. Yeah. There's a nugget in there for everybody. And that book is in the process right now of being completely updated for the new tax law.
Okay.
So you got a PDF copy without a cover on it.
I know. It had this white page. I went,
updated.
Well, and of course that is the thing that is so beneficial, is the fact that you do make updates. We can go back through, we can buy these books, and we've got all these books on our shelves behind us and all these things, but especially with tax code. If it's not updated, it's not that it's wrong, because it's probably still at least got something that, but we need to always make sure that we know the latest and greatest information.
Right. Well, and with the overhaul, the tax code, we had to go back and rewrite several of our chapters.
Oh, yeah.
Because they were changed just a little bit from the way we used to do it. And so it made me sit down and reread my whole book and make the tweaks that needed to be made. And so we should have a new shipment of those coming in here shortly.
Great.
Be ready to give people the newest one. In addition to that, for your listeners today, they can find the books on my website, but we have a special little tax planning guide that we've put together.
Oh, very cool.
Basically compares the old tax code that we're somewhat familiar with to the new. And so we've kind of put things side by side so that you can see, here's what we're kind of used to, but here's how it is now.
Right. Because we're thinking, wait a minute, I figured it out once. I got to do it again.
Right. Yeah. So that seems to be going well with people, because they're able to go, oh, that's why this happened. Or that's why my accountant said I can't do whatever.
Right.
So we are giving those away. If they'll just go to www.taxcoachforyou.com /the Business Power Hour.
Cool. Perfect.
And we'll be happy to send those out to everybody that does that. And then if they're interested in a book, they can just go to the www.taxcoachforyou.com. There's a tab that says books. And we give my books away. We just ask that they help with the shipping for us to get them sent off to them and everything. Otherwise, we're happy to give them away.
Great.
And share that information as much as we can with people.
Right. And we mentioned the fact that just because you're in Idaho doesn't mean that people from around the United States and even around the world, people who are doing business here in the United States, there still might be things that they need to be doing too.
Right. Yes. And they can pick up a lot of that from one of the books. So yeah,
great.
We're happy to share knowledge.
Perfect. Well, tell us again, Diane, how do they find you and connect with you?
So www.taxcoachforyou.com. That's the words taxcoach, the number 4, YOU.com.
Perfect.
/Business Power Hour. Or if you're looking for a book, just taxcoachforyou.com.
Perfect. I love it. Well, do you have any final thoughts that you want to leave everyone with?
Just remember, pay your fair share of tax and don't leave the IRS a big tip.
Perfect. I love it. Well, I am Deb Creer. I've been having an absolutely delightful time, amazingly, talking taxes with Diane Gardner. And until next time, everyone have a great day.
Thanks for listening to the Business Power Hour, hosted by Deb Creer. Join us next time for more real-life stories and techniques to power up your business.
You've been listening to C-Suite Radio. For more top business podcasts, visit c-suiteradio.com.